We're going to do a video on the S&P 500 with technical analysis, and we've got a daily chart of the S&P 500 E-mini futures contract from Chicago Mercantile Exchange. It's a daily chart with a 200-day moving average in blue here. You can't see it on this chart, but the market made a high today of 4,009, which is right about here, right there, and made a low of 39.51. This chart's not updated yet. Let's take a look real quick. As we can see, 4,009 is getting perilously close here to this 200-day moving average, which is good if you want this S&P 500 to break out into a bull market. We can see it's been in a bear market. It's still technically in a bear market, but we're getting a really good rally. We got a rally starting from October 13th, went up and made a decent, really nice. You can see this green 5-day moving average just came right up there. We got reasonable support. You'll see it closed below the 20-day, but rallied right back around, so it's fooled a bunch of people, and that got a bunch of people who had gone short, got them to cover their shorts, and you can see all that activity in here. I don't want to say a train eye because that sounds arrogant, but they pushed this back up with some shorts who were covering, dropped back down, closed it again below the 20, and they bought the heck out of it again. So there's a serious weight is on the buy side for the S&P 500 right now. And again, I'm putting it right where it is today, 4,009, and it closed right 1 point below 4,000, closed at 39.99 on this contract, which is the futures contract for December. Let's take a look real quick at the weekly and see what that looks like. We closed above the 20-week here. You can see it's been oscillating back and forth all around here. Put in this attack of the 200-week and still in a bull market on the longer-term weekly chart. We are not below the 200-week moving average, so that means we're still in bull market territory, and it is rallying. So there's no question about it. Price is above the green 5-week moving average, above the red. But keep in mind, the green 5-week moving average line should be above that red line. So this is not a hugely strong rally. You'll see right here, the green is above the red. That's what's got to happen. But you'll notice how long it went before it got up there. But when price broke through the red 20-week, green was right there with it. We do not have that right here. And that's something to keep an eye on. Same thing happened right here, and it was a false rally. So this could easily be a false rally coming up here to about let's call it the 4,080 on a weekly, and then breaking back down. So this is very much of a concern. Let me expand it. The green 5-week is below the red 20-week. That's not good when price is closed above the 20. To give it to you again, in this section right here, when we got this sustained rally, we had a price breakthrough on this day, and you can see green and red were right touching each other on that day, almost touching each other, and that's what's supposed to happen. This is not necessarily, this could be a false breakout to the upside. I'm not saying it is one way or the other, but you have to get that green line above that red line. Green is 5, red is 20 moving average for the week. That green's got to be above the 20 before you can get any confidence in this rally. Always look in the opposite way of what it appears, and this could easily be a top or a top here. As I said, 480, 475, and then you fall right back down again. So it's very similar to this right here. You'll notice it closed above and fell right back down again. So we need to get, and you'll notice the green never closed above the 20. It went right up to it. The price closed above the 20 here. Green went right up to it and never did, and it came back. So I'm not too sure about this rally. This might be a false situation. I can't show you the hourlies on this chart, but my guess is this market's going to correct next week and probably get down as low as back in the 3,800s again. Let's call it 38.75, but it might go higher first. So it might go a little higher first, get a bunch of longs in there, and then fall back down towards the end of next week. It might even take the next week after that, because we're looking at a weekly chart. Let me take a look at this daily chart again real quick. So it's getting a hair overbought on a weekly, so maybe a little higher on the weekly, maybe 4,025-ish, Monday, Tuesday, and then probably falls back down here to the 38.60 level, something like that. It wouldn't surprise me, but that fall down, that drawback may take all the way till the end of the week, if it happens at all for entertainment purposes only. Let's take a look and see what RBAM Research says about it. We have algorithmically generated entry prices for the SP 500 futures contract right around here for 14 of November, the 14th of November, 1, 2, 5, 10, and 20-day hold periods. I'm also going to show you a trend following system real quick, but let's look at this. For Monday, we're showing shorts consistent with my analysis at 40 on the 2-day, 5, 10, and 20. We have 4,014, and then on the 20-day, 4,006. So consistent with my analysis, this algo is not predicting anything. For entertainment purposes only, this algo is saying a short might be a good idea, assuming your own analysis thinks it's a good idea. And keep in mind, all of our information is for entertainment purposes only, doesn't predict anything. You have to use your own analysis. You trade at your own risk, and you can't use ours for anything but entertainment, including my commentary and entry prices. Let's take a look at the trend following 30-day hold. This trading days. Get in, assuming your own analysis says it's a good idea Monday. Get out at the 30th trading day at a loss, or take your profit soon if you can get it. And it's extremely interesting. Not sure what's going on here. I noticed this earlier. It shows a flat. Shows flat for Monday, which is very, very interesting. These support and resistance things are for people who subscribe to our paid service, but I'm showing them to you real quick. We have intraday support and resistance on here. We put them up every day, and it gives you intraday support and resistance if you're a day trader, and they're fantastic. You can get access to everything we've got, 15-day or 14-day free trial, link in the description below. Just go over there, free access, no credit card required, rbamresearch.com, sign up and get immediate access with your email address to 190 stocks, the major forex pairs, and crude oil. We suspended crypto because of the volatility in that market, but we'll put it back up as soon as it slows down. Everything's up by 7 a.m. Monday through Friday, but you can usually get it after 6 p.m. the night before if you head over to our website earlier. Keep in mind, everything's for entertainment purposes only. You trade at your own risk. You should always do your own analysis. If you like this video, please click the like button. If you want to subscribe, please do that as well. If you have a great ticker symbol, please leave it in the comment section below. And if it's a good one we think people would like, we'll do a video on it.